Hello investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Cloudflare. So Cloudflare is a highly innovative company. It's growing at a really rapid rate, but it's priced at 67 times forward sales. So I'm going to go through the pluses and minuses of this investment and let you make up your own opinion of whether this is compelling or not, okay? So here's the stock, right? So in 2021, this has been sizzling hot, particularly in the last 4 weeks. The stock is up 50%. So far, so good, right? Who wouldn't be delighted with this investment, right? But in investing, what matters is not so much how much you make, but how much you keep. And that's what we're going to kind of discuss. So this graph is the beauty of this investment, right? So we've got a business that's growing at a very rapid rate, okay? It's incredibly stable and predictable, okay? Plenty of visibility. So far, into 2021, they've raised their guidance twice already. So Q4, they put out strong guidance. Q1, they raised their guidance. Q2, raised their guidance again. Going into Q3, more likely than not, they're going to raise their guidance, okay? So it's a business that's just sizzling, okay? The other thing that I want to highlight is I specifically note these large customers because the smaller cohorts, they're not growing quite as fast. But the large customers spending more than 100K on an ARR, annualized recurring revenues, is growing at 67% year over year, okay? So very, very fast growth in large customers, okay? Furthermore, they are just incredibly able to have this freemium model. You come in, you try it out, and then you either go to the subscription or the pay-as-you-go model. And it works really, really well. So their ability to scale with the customer and deliver high speed, reliability, high performance and security, so many different products for companies that have websites and apps and stuff, that is just exactly what the customer wants. And you can see here, right? So net dollar-based retention was 124% for Q2, okay? So customer comes in, and over the period of a year, that cohort spends 24% more in revenues than at the start of the year. So very fast customer acquisition, very fast growth rates, and sticky customer. Exactly what you want. Now here's the problem, right? So as I already alluded to in the introduction, investors are being asked to pay 67 times forward sales, okay? Think about that for a moment. At 67 times forward sales, let's say for the sake of the discussion that the multiple was to do well and expand up to 70 times forward sales. That implies that at the current rate, investors are paying 70 years forward, 70 years of forward sales. So the company would have to continue at this pace for 70 years for investors to be compensated. Really scratches your head. It makes me stutter, because ultimately it's very, very difficult to predict how the company is going to do in the next 3-5 years, not to mention the next 70 years. So it kind of yes, I understand. I fully grasp, right? I grasp everything that's compelling here, but at some point valuations do need to make sense, because you've got a business that is doing everything right now right, but it's very difficult to predict how things are going to go in the next 5 years. So I just for the sake of discussion, okay, so I'm going to throw in a comparable, right? So Zscaler is one of those cybersecurity companies that focuses predominantly on identity. It tackles the problem of cybersecurity from a different angle, and as I already said before, Cloudflare has a lot of products. So this is just one angle that I'm kind of talking about, which is cybersecurity. It's not the other angles to do with it being a CDN or other overlapping with other products. This is just one of the segments that is interesting here. Yet Zscaler is growing at such a rapid rate, and it's priced at 38 times forward sales. So it's kind of nearly half the multiple of what Cloudflare is trading at. So it really makes you think, okay, is there a lot more pricing power? Because ultimately, remember, the company's Cloudflare is kind of close to break even on its profitability. So we're not even talking about a company that's highly profitable. I know they have this kind of long-term guidance that they're going to be 20% operating margins, but I mean, in the long term, I'm dead, you're dead. It makes a difference when you're paying 60 times 67 times forward sales, even if the multiple stays the same, okay? So let's say that you don't get further multiple expansion, but let's say it stays the same. The business grows at, let's say, 40% over the next year. That's okay, but you're not having any margin of safety there, okay? And if you, let's say for the sake of discussion that as we go into 2023, that is the growth rate just dips down slightly to approximately the high 30% CAGR. If the growth rate goes at 38%, investors are kind of, this is no longer a hyper growth company, this is a fast growing company. We're not going to pay 17 times forward sales. I'm going to pay, let's say, 50 or 40 times forward sales. So then the multiple compresses meaningfully, and then you're kind of like, okay, yes, the company did grow, it did meet all the expectations, but the expectations were just so high that the multiple compressed back down. So ultimately, you kind of end up with a loss. So it's just something that I want to kind of bat around and share with you, just for you to think through. If you want to know what kind of stocks I'm particularly excited about, don't forget to check out our marketplace called Deep Value Returns. I tell you the stocks that I own and help you think about investing, help you become a better investor, think through the process of investing and buying a portfolio of stocks. Okay, see you soon. Bye-bye.